Good morning. Happy Monday. Welcome back. Everyone loves Mondays. We are opening basically break even, a little bit lower, to be expected after quite a bit of buying. Now, we bet and we have a lot of predictions that the market's going to continue to rally, right? So, again, even though we're opening a little red, just a reminder, it's not so much what the first futures action or the first pre-market action looks like, right? So everything's still in line for this idea. Couple other things. What happened on Friday? Well, we continued the rally. We continued to push our long position, right? Now, there was certainly plenty of areas where it made sense risk reward wise to take some of that profit, right? To transition positions to go further, put bets on that make more sense for the long trade. There's areas where you could do that, right? One of the areas again would be sort of on some of these growth ideas. There's been a lot of points, and so it makes sense that if you're going to bet on further price action, you're going to want a little bit more legs. So when we look at this rally, it's a story of sort of two different ideas, right? We have the Nasdaq that is about to reach all-time high, while S&P in the Dow has been at all-time, right? A lot of this, again, the average is being driven down or being held back by mega caps, right? And so these tickers sort of, besides Google, have broken out at basically the same time as the rest of tickers because they're all following mega caps, right? We took these trades from the 25th. We've traded them. It kind of sucks that we had to trade normie trades to make money, but hey, we'll take the money, right? And so there were areas where, okay, Friday, you know what? Let's take some of that, right? And we talked about the trades that fell within the line of support to resistance, take my 100%, walk away, thank you, right? These kind of trades were the ones on Friday. The rest are getting pushed, and most of these were added back on, or you're waiting for transition still, right? Now, when are we predicting for this price movement to continue, right? The idea here is that it's going to be different than before. Usually what's going to happen here, you're going to get a consolidation. Nasdaq here is going to consolidate as it gets towards all-time high. It's going to slow, right? We're break even right now. Most of the time what you're going to get is some sort of price action that goes from here to here, and then it's going to dick around over here, consolidate before it gets going again, right? This is a big price move. Price doesn't just keep going. That's 10 green candles in a row, almost 10% on the Nasdaq. Everyone's betting that the market continues to go to all-time high, but no one's really betting that it's going to go sharply like this here, right? We'll see how that goes today. In terms of that to be true, it would need to be this week. It doesn't need to be today. It would need to be this week for us to get confirmation of this idea. What's happening this week? Well, we start earnings season again. Talked a little bit about earnings last week, and what exactly is the bet right now? Well, the market's rallying into earnings, so there's some understanding that earnings are going to be pretty damn good again. It's not so much again that earnings matter, right? We've already priced this idea in a long time ago, right? Why were cyclicals and value doing well? Because there was already a bet that they were going to be opening up earlier, right? That's like 9 months ago, right? What we're going to look for, though, is the volatility. What do we bet on? We bet on higher volatility, and that's basically it. The premium level on options is just from that IV. Those will increase going into earnings. What's up on the bat first? Banks. We have JP Morgan, Bank of America, Goldman, Morgan. They all go this week, Wednesday, Thursday. We continue then into next week with more earnings that come in from other sectors, but it's always the big banks first. What have banks been doing? We've been trading banks for a while. Now, how you position yourself specifically around certain banks is definitely a challenge. You can use XLF in this case. We talk about it. This is the benchmark. I do talk about you want to use individual companies though. It is a bit better. I've used Bank of America as a better, probably the best example. It's the only one that you're really going to get the trend and get exposure to the whole thing. JP Morgan's a little bit of a turd. I mean, you can do it, but I mean, let's just be honest. It's probably, you can just buy XLF. I mean, it's the largest, but that's that. Now, we've talked a lot about regional banks. Now, think about sort of the flow in which we're in. And I did post this chart last night, the KBE chart. This is the regional bank chart. Oh shit, what's my? Oh well, I think we just lost some drawings here. Harry, there we go. Oh Jesus, losing my mind. Okay, so I posted the regional banks, right? We've talked about a few of these different banks, and I posted a few of them in this list as well. The way in which this will move in respect is, again, it's going to be basically, it's either going to be leading or following. We'll see how the first 2 days before earnings go on some of the regional banks. Obviously, I put this on there. I'm expecting a move. We'll see how those go. In terms of the best way to maneuver around earnings, you just forget about it. All you're betting on is higher volatility, right? And how you're going to maneuver around earnings is just to remember that, okay, there's higher volatility on this day. And really what that's going to mean is more volume. Going into the day, it's going to depend on which side that extra volume is going on, right? The small caps will give a very good understanding of that move to begin with, because who's going to be buying all the small caps? Well, the big banks will. The big banks will be buying up most of this shit because they know beforehand what exactly is going to happen. They're going to be buying back no matter what. So again, no matter what happens in this move, you continue to push this position. It doesn't matter, right? It literally doesn't matter, but it is the start of earnings. We should be expecting earnings to be, everything should be beating earnings as usual. There's, I'm sure, going to be surprising shit. The thing to remember is it doesn't matter. It doesn't matter if they sold more, if they're doing something, if Carnival sold more t-shirts this quarter. None of that shit matters, right? That's not what matters. It's where the chart is. Obviously, people are pricing and trading around these ideas, right? But the price is going to make up those ideas, and it's going to make up the behavior of other traders. And we'll understand whether they're going to be taking profit, pushing these positions. We're going to try to remain neutral on the idea of trying to figure out how a company works. None of us here are very good at that, right? If we were good at that shit, then we wouldn't be here right now trading, right? We'd be getting a real fucking job and working at one of these businesses, right? None of us know any of that shit, okay? Some of us might know a little bit of stuff. Not enough, obviously. So we'll stick to what we know, which is price. And no one has control over price. That's probably the best thing to be using, right? So again, earnings will be coming. Don't let that fool you. There's things that are going to happen. Again, we'll take it as it comes. We'll take it in stride. We're not going to let it affect our decision making, other than to know that more volatility will come and that there's expectations in the market, right, of continuing this move. Okay, what else is happening this week? We have more treasury sales coming in. Okay, auctions. Now, let's see if we can get anything here. Yields are rising a tiny bit. The thing to note here is that most banks have came out and already said, because again, we have earnings coming up, so the banks start talking a little bit more. We have action already right now that says that we will have, there's enough demand to be buying all of the auctions that are coming. There's like $378 billion worth of auctions in the next 3 weeks, which is like a absolute shit ton of money, a ton of supply. Now, the Fed is the largest portion of the demand that buys everything that they offer for supply, which makes it kind of silly, but they are the largest factor of demand. The second is foreign markets, and we should be expecting that everything gets picked up. Again, the NASDAQ has not reacted negatively to yields. We should not be hearing conversations about yields other than to say the fact that, yes, it is a risk event. It's a risk event. No one is looking at it as the same as over here where it could be a problem because, again, it's not like the market didn't know, oh shit, there's actually a ton of auctions coming up in terms of bonds. No one's, just got surprised. Everyone's already pricing past that. We already understand the baseline. The only way in which it will affect us is if something poorly does happen. And how are we going to react to that? we're going to need to be nimble and understand, just like with earnings, that, okay, there is a risk event there, but the probability that something happens is low, so we keep trading probability, and that's that things will continue and they're not going to get negatively affected. If they do, we'll react in the moment. Again, we use pretty simple rules here to judge situations. If price reacts in a way that would make us exit a position, then we will do so. Whether that's a relative reversal, whether there's some sort of candle formations that form into something that say, okay, let's take our profit, risk reward's not there, let's transition, look for something else, and worst case scenario, you get stopped out. It's going to happen, right? Not everything's going to be a home run. So we'll see how those go this week. I don't see that being a problem. And again, that's over the next 3 weeks or so. There's going to be volatility, of course, because we're coming out of this rally, and whether or not the market can continue to push this, of course, is a question. And we can just bet on how we want and react how we want. It doesn't really matter what anyone thinks, because we're all going to get the same damn price at the end of the day. So we'll see how these things work. Now let's go into a few things. We bet on Friday that this was going to be up. It's up 2.5% today. Nice job. Nice bet, guys. Good job. Now we use two different ETFs here. XOP. XOP is up 1%. This is the normal 1X, the normal 1 ETF. Up 1%. That's basically all you needed, because again, you're betting when this is going down, which means that if you're betting with options, that as long as you get 1%, you're basically golden, because this is trending downwards. It's moving down. You're buying when everyone else wants to sell it. And so simple bet. Again, guys, it's just that it was a better than 50-50, right? Better than 50-50. And then Gush is the other with the leverage. This is not going to really show itself pre-market. It was down 1% like 20 minutes ago. So we'll see what that looks like. And the thing really here is that the dollar's not pushing up or anything like that. So again, the dollar continuing to be down in an expectation that it's actually down here. It's inflation, right? Just inflation showing that here. So we'll see how that continues. Again, we didn't use specifically energy companies. They are tied to crude. This is still we have an understanding of long-term, but I talked about short-term volatility, just like us taking a risky bet here, right? Keep those ideas in mind, that we're, again, in a cycle. We had cyclicals leading, and then we switched to growth. These defensive tickers are not going to do as well when growth is so sort of in demand, right? Now, what the hell happened with China? Well, let's just say that this turned out pretty well. Now, this is where, again, I say the concept of it only takes one trade. I've taken this trade multiple times, and I've gotten stopped out every time. How much am I losing to get stopped out every time? Single-digit percent, right? Single digits, and it's usually never more than 5%, because that just means I made a bad trade, right? So we're talking about a couple percent each time I get stopped out on. How many percent are you going to make for taking this trade here going over the weekend? Now, we took these trades over the weekend, right? Does it matter that it's because they just got fined $2.8 billion and that everyone goes, oh, only $2.8 billion Baba got fined? Perfect. That's a great number. Good for you guys. And so now it's up 6.5%. It doesn't matter what the reason is. It's about betting on price in the way in which price is going to react. Somewhere in here, that idea is being built, right? What we all understand that there was some sort of government understanding, and I talked about the Hang Seng and regulations from China and why price is getting pushed down because of regulations, and is how as soon as that goes away, price will go back to the upside. And that's all it did, right? That's literally all it did. That's it. This is 6.5%. That's 100% trade. That's 100%. So let's say I got stopped out 20 times. You still made over 50%. That's it. Good job. We take these trades because the worst case scenario is you get stopped out, but the best case scenario, or really just any other fucking scenarios, you're going to make money, right? And if you don't if you don't make trades and you don't go take the risks to capture things, then you might as well put the money in a Vanguard, right? Put the money in a Vanguard, bet on the S&P. The S&P will never surprise you. You're never going to get fucked. Yeah, you're going to have bad days every year, and that will fuck your average. If you were able to miss the worst days in the market, you would be doing significantly well. But if your money's not in the market, then how are you making money, right? How are you going to ever guess the timing, right? So we operate in a very short-term sort of method, and this is how we get into trades. And again, you have to take these trades when they come, and we take them on support. And then if you get a nice gap up like that, we don't take the trade for, oh, we're definitely going to make 6.5% here. No, that's not the point. We're betting on an idea. There it is. Good job. That's it. Okay. So put that in perspective. Now, other trades. There's a few other ones to make. Again, the pre-market shit here doesn't really matter, but I just want to put it into perspective a little bit because it's leading into the day. We'll see how, again, it's Monday. We're coming off a huge rally. We don't know shit yet, right? We're just looking at some of the pre-market action because it means we'll be able to take some of these trades, profit, right? Okay, Tesla. We talked about the tightening over here, how if you weren't a part of this move, how you could take this trade on Friday. Now, we knew that EVs are a little bit further behind, right? But I talked about the tightening here. And again, whenever you get this tightening coming in, yeah, you can tell me it's a flag, whatever. It's not a flag until it breaks, right? But you can take the trade as it's tightening to preempt the break, right? If this is tightening, which way is it going to move? Well, we've seen in the past that when it's tightening, it goes to the downside, but we understand that we're in a different area. We've already broken out of this consolidation. Price is going to go to the upside. You can take the trades as it tightens. And again, this has already made a lot of a move. We take that trade. This is up 1.5%. We'll see how this continues today. EVs were a little bit further behind last week, right? Ford got a little bit beat up here. But again, it's the same sort of situation where, okay, what is this price action? What is its relation to mega caps? Why exactly do these moves look so different if they're really the same idea of growth? EVs being that they're actually getting help from a sort of a government standpoint in terms of funding. What exactly is the reason for these things? Again, it just is most likely a flow-based situation. And we understood that mega caps really took a lot of demand from the market last week. And we started off really low volume, finished with some average volume, coming into now going to be a lot of volatility, higher volume. We understood that this took up a lot of that, right? So there's no reason not to bet on those situations on pullbacks. Again, pullbacks are an opportunity. Red days are buy days. Those are your opportunities to be getting into positions. If you don't take those opportunities, that's again profit that you're leaving on the table, right? It doesn't need to turn into profit, but if you don't buy something, how are you ever going to make money, right? And again, that's where obviously the more capital you have, the more risks you can take and the more you'll get paid for from fucking probability alone, right? And then again, that's what makes things difficult. If you're just picking and choosing, you can sometimes, the market can be trending up. Like how many of you felt like maybe not specifically here, because again, I talked about when the market's doing this, we need to be very careful of ourselves to be like, well, I'm doing great picking stocks here. When everything is going up, right? You could make money on anything. There's certain things you could do better on, of course. But again, when the market's just trending up, everyone's making money by betting to the upside. But think about the situations where the market's going up and the things you're buying are going down, right? We've all felt like that. It's like, this is literally ridiculous. Somehow the market's doing this. You have this many green days in a row, and then you're buying something that doesn't go up, right? That there's nothing, it's going to happen, right? This is just where capturing and throwing a larger net is going to beat just picking one ticker, right? And betting it on there. You're never going to make money doing that, right? And that's where, at the end of the day, if you're not beating this average, then there needs to be something that changes, right? And so when we look at these sort of situations, again, this is going to happen. It's like someone last week could have put trade into Tesla and then be like, well, why am I down this week when the whole NASDAQ is up a significant amount? It's not just, it's not like an unlucky, it's just a variance thing, right? And if you can remain in that position long enough, then you'll be fine. But as I've said last week, and we should distinguish ourselves, is that we're not investing. Yeah, we could just put our money into the market and invest it over the years. And there'll be down days and those will, eat away at the profit, but overall you'll still be up, right? At the end of the year you'll still be up, right? But we don't operate in that space. We understand we can do that. We operate in the short-term trading aspect, which means we're going to need to capture in a short amount of time, which means the variance is going to go up and you're going to lose more trades than you win. But when you win the trades, you're going to make more money, right, than you lose. And that's the reality. And so again, that type of trading, you could have 6 months where the variance just goes against you. But are you going to be able to have the capital to withstand that, right? And that's where that problem comes in, where it becomes very difficult and it becomes shitty and it feels bad when you get this sort of move here, where there's people that you look at this and you're like, how did I fuck this one up? It's variance. It can happen. It can certainly happen. And I talked about how this has been a better week because we had kind of maneuvered around that idea a little bit better this go around, because before we've had some times when you get this breakout and you capture it off the start and then it's very hard at the tail end. And that's where you start to ramp up your aggressiveness here and you don't fondle and fumble the moment, because it's really easy to hear, now take the profit, and then that's all you've got as you start a new consolidation. It kind of, you set yourself up to be in a situation where, okay, you traded through this and now you're going to stop trading to be a little bit more risk adverse. But if you don't continue the risk, then you're going to miss out on that next moment, right? You have to keep the consistency, the discipline, and it gets very difficult over here. So by continuing the trades here and not sort of stepping off the gas, you're actually going to put yourself in a position to maneuver through the risk a little bit better. Because if you get out of positions, now you're back in a situation where you're trying to find a new way to get your foot in the door. And by not having a position already, it's very difficult, because everything is an opportunity when you have cash. And not all opportunities are made equal, but the market wants to make you think that, right? The average is going up. Everything must be good. It gets very difficult at that point, right? So by continuing that consistency of trying to have all the money in the market all the time, understanding when we need to be on the sidelines, of course, but we need to continue just to add in new pieces in terms of price action, understand flows, and try to be in the market to feel it, because it's really easy to, we try not to trade emotionally or anything like that, of course, but if you're not actually actively in here trading, and you're a part of it and actually feeling it as you trade and feel maybe the pressure as you trade it, it's really easy to not be in the market and then to look at this and go, oh, I can't buy that. If you're not in a position right now, you're probably saying, I can't buy there. What am I going to do over here? What am I buying over here? But if you're in a position right now, you go, okay, I'm holding my positions and pushing them, but you know what? I'm also a buyer. I can tell you those are two opposite things, right? They're two opposite things. And so just by virtue of trading and trying to continue the move, it's going to facilitate some of that continued discipline and to continue to actually put on risk that will pay more up here. It will pay more here because the risk is increasing. I put out a silly tweet last night. Just the thing to remember here is that the VIX is very low. Volatility is projected to be very low. Obviously, there's VIX bets going on, right? Everyone knows that. Everyone's buying long positions here because it's so low anyway, right? But it's still, volatility is very low in the market. The thing that's not in this value here, obviously not, is FOMO. FOMO is a kind of anxiety, but it's a factor of volatility. People's fear of missing out is a form of volatility. That's a reality. And I talked about the anxiousness over here, that people will get anxious. Anxiousness can be buying. It can be selling. Volatility is up or down, right? It could be either or. So is fear of missing out. It could be more buying on the momentum side, or it could be very quick selling. That's a tail risk that's involved here, and we need to, again, always be ready for that kind of trading to come in, and it's just a market-wide sort of situation, right? You never get to know when. It creeps and it starts to happen. People all of a sudden start to have it. Again, you don't know which way that's going to go. And that's the reality. And so all we can do, we can't listen to this market's crazy. It's crazy not to be in it. That's the reality. And so we're going to keep trading it. Again, we use a macro idea, a long-term idea to make short-term decisions, which is a very strange concept. This is probably going to be another 12-year, 13-year bull run, right? That should help us with our short-term trades, okay? Because if the market is going to continue to climb, which, I mean, no one's betting that it's not, then there's no reason why we can't just keep taking the trades on the pullbacks, right? So whether or not this is the end here and we wait for another pullback to buy it again, yep, one of the pullbacks is going to lead to a 10% correction. I guarantee it. One of these times we're going to go to buy down here, and guess what? It's going to keep going another 10%. It will happen. I guarantee it. One of these times, let's put this on the weekend, and then we open up lower on Monday. And then it starts a 10% correction. But guess what? You don't get to know when, and the probability is that it goes up a lot more often, a lot more green than red. And based on our rules and the way we trade, we will not get hurt in those situations. And that's where being able to put a lot of money on trades going off of pullbacks and into these breakouts and continue to put the money on, we're able to do it because of the way in which we trade. We don't trade over a long period of time. We trade in a short period, in a short-term aspect, very quick. We're in and out, and we take the trade. Because if it's not moving, then we're not in the trade, right? Only if we're very much in the money will we push trades through pullbacks. Otherwise, if it's not moving in direction and with velocity, we're not in the trade. That's how we trade. That's it, right? So, again, something doesn't work, we're out of the position already, and it can go down 10% all at once, and we'll probably go buy it, right? If you're in a position here and it starts to come down, well, we're going to have to take profit at somewhere in there. What if it comes all the way down here? Well, that's basically a thank you from all of us because we'll go buy it down there then, right? These sort of things, no matter what happens, it doesn't matter. Keep the gas going. Keep the trading going. Again, the risks pay off. It's costly, right? But it pays. And that's the difference between what we're doing and investing, right? Investing, you put all the cash up front, and then eventually you'll get it paid back compounded. We're trying to make an income here. Trying to make the money now because I don't have all fucking day or all year. I got other shit to do. Did you know Israel was going to attack Iran's nuclear facilities? Absolutely. Last time when I was in Tel Aviv in 2017, I went to a village up in the hills. I can show you them pictures. A man told me that he himself was going to go pitchfork the hell out of Iran's nuclear plant and centrifuge the shit out of them. Centrifuged out of his mind. Nice guy. Okay, let's see what we get. Again, hey, we have no idea. We have bets. We'll see how we are going to play them. Let's see if we get bid off the start, right? Again, there's a lot of different things going on. You could have a very slow break-even day today. We're off of a 10-day streak. Let's see what we get. Let's see what we get. Whether we're going bid. Again, here's a very important concept. We're not making a decision for the next 5-minute candle. By lunch, by close, some of your positions will require you to make decisions. Absolutely. And that's why we did some of them Friday. And you're going to need to do whatever you're going to have to fucking do, right? But we're not looking at price as it's going to come in the next 5 minutes. We're looking, where's it going to be by midweek, the end of the week? Where's it going to be going next week? And we make trades based on that because we need people to think that. Even if we're making a trade for 3 days, 2 days, we need people to think it's going to be up further than that, right? Because we need them to buy our position at that point. They still would need to be buying it, right? Very important to remember that. We're betting on the speed and the direction as well as with the price, but we need someone to buy our position and think that there's still value to be attained in that. You buy some 10% out of the money calls, you need to go more than 10%. You need to go 15, 20% because someone else needs to fucking take that off your hands or you're going to lose all that money. No one's going to want to buy it, right? Okay. I start Uber with the 4. XPEV 1.5, SID 2, CNX 2%. CNXs are, again, some of our energy companies are doing well because of that crude bounce. LTR continues. We saw that pre-market action. We'll see how that goes. Might get some profit from the small guys. NYCB 30 basis points against small caps, small cap banks. Get some bets on those. KRE almost 1%. Klarna is 1%. We'll see how that goes. Again, I posted that chart. We'll see how exactly that looks. Uber getting the bid here. Very nice. Again, I got the gap over that level we were looking at. That's exactly what we were looking for, or whether or not there was going to be some bullishness there. So really nice there. I mean, it was tightening, and I mean, that's it. Got the gap. That's all you need to see. It's a break. It's a breakout. It's not growth. It's not value. It's its own damn thing. Energy company's looking very good. Put you over on the big buy list. Baba 6%. We'll see how this holds up here. The question is whether it holds here. Obviously, I already took the profit on that, so short-term trades I'm not gonna hold. You can put new trades on though. I mean, there's no reason not. I mean, I'm trading all this shit up to the level, so. But those were April monthlies. Transition boys. I'm trading all that stuff up here. Again, I'm betting on Asia to be all the way up there. So all of it. Okay, Tesla continuing. We'll see. Again, the question is how well do EVs do here? They have a lot of points to catch up from last week if we're going to continue the move. Just to put it into perspective, we're going bid still from the start here, which is, again, to be expected when you open a little bit lower. We'll see what this looks like in terms of candles, whether it's tightening. That's the Qs. There's the SPY. SPY's right there as well. There is there is some sort of trend line here with the rest. It's not going to really act as a resistance as seen from last week. We'll see what this looks like. If we get some sort of reaction or not in there, I don't know, because it's kind of too rough of an area. It's more of a zone. The Dow is still just being protective, defensive, right, as it's supposed to be, which does help with long-term sort of capital restraints, because you can't put all your money in the market all the time. Having it just roll with the Dow is definitely very nice. We put GE and BA and stuff on last week. Those opened a little bit lower here, but then they went bid off the start. So this is where watching that pre-market action, don't put your fucking trades in before the market starts. You will literally rope yourself to death. It's one of like the biggest lessons is you could have watched this pre-market action, like, oh shit, this stuff's gonna be down. I'm gonna need to take profit on it. And then it goes bid off to start, and then you look like a fool because you couldn't wait 2 seconds to see the first tick, right? You couldn't wait for the first order to go put the trade in. You had to place it before, and then you're trying to guess the bid and everything. No, don't do that. It starts to react and then react, right? Let's see. Energy, good. Oil, good. How we handle these trades, we'll see, right? Again, equities need to react to that market. So it usually takes like the first hourly candle. Anything that reacts to a 24-hour market on the equity side. So for instance, even gold, right? Gold ETFs. Gold trades 24/7. So that first hourly candle is basically trying to benchmark to that 24 hours of action in that opening candle. Same with energy, oil, and shit like that, right? So we'll see what this looks like. How you handle these situations is 2.5% on gush. I mean, it's predominantly fucking guessing. So there's other than just seeing the where it is up or down, you really don't have much else. Small caps have been behind for a while now, Wiz. Because again, they led and then they've been consolidating a lot longer, and we understand that this because there's regional banks and oil that's holding them down. And yeah, so we're not using that. We're not using the small cap metric much anymore since like a few weeks ago. The point at which we stopped using it is when we put on the Dow, right? We went from small cap value to large cap value with the Dow Jones. That was the moment when we switched over, because there was an understanding that there was going to be a very big switch there, and that's why we haven't really looked at that as all. But that's why I'm putting on small cap banks once again, because again, it's sort of, that's a portion of it that is going to do better now, but it's because the big banks were taking up everything, right? And so that average it's a really bad average if the regional banks aren't putting points on, and because that's all basically the Russell is. The Russell 2000, not like the 1000, but the 2000 is basically just regional banks. Okay, come on, Baba. If I can get paid uh, quite a bit on this, would be great. I took the April monthlies. We have again. I talk about this idea when we take trades. I talk about like a gradient of trades, because when you place a trade, you don't know where it's going to go, so you need to just be planned and prepared for everything. And we usually talk about that when you buy on support. Even if you're taking a trade, like a weekend trade, you don't know where it's going to go, right? So this could open below and you'll get stopped out on everything. But if it opens higher, and it's not just where it opens, it's how it continues to trade. If it opens 1% higher and then keeps going bid, you would keep pushing a position, right? And you don't know how long it will take to move. That's the thing you don't know, is how long it will take. You have to buy multiple contracts. So you could have, you could have longer dated contracts here, and what you're going to do is continue to push those. You took the profit on the Aprils, but of course you're going to push everything else here, right? It's those situations, and like there's some other examples here, right? Billy, open lower, I get stopped out, right? I got stopped out. That was it. That was it. Doesn't mean we can't take the trade here, but this is going to happen, right? Now, does this stop out equal how much I made on Bubba? No, it's not even fucking close, right? So that's going to happen, though. Will I do it again? I'll do it again. TCS with some moves. See how these kind of, there's some that's like stand out. It's its own thing. OSTK, I posted that chart. You have to get involved there, obviously. We've been talking about it the last couple of days. We already were talking about the move. If you're not gonna buy that type of stuff, someone else will, because momentum city over there. Obviously, we have the long term idea here. We got a big move. We got 100% move. That was a really sneaky one where we got 100% move here off of this pullback, and then it consolidated again. And yet you just got to keep taking that trade, right? Keep taking the trade. Brian mentions FedEx. Obviously, transportation has been doing phenomenal, right? Phenomenal. We've been a part of that UPS trade as well. All time UPS. I mean, obviously a little bit more violent over here. But this isn't many points. It's the funniest part, is it's really suspect. It's not many points. It's just very vertical. Again, there's a lot of transportation companies been doing very well. A very lagged move based on the distribution side of things for vaccines. Who knows? Right? Okay, we're almost back to the high, boys. Again, what did we bet on? We bet that the market would continue. There should be a take profit day here. This is a technical take profit day, just like the last 5 days were take profit days. It's not, is it? Again, every point above here, you are gaining a larger exponential because the risk is much higher. The risk is so much higher for this to continue that every point above will gain probably twice as much as we gain back here, because there's just so much more risk involved. If the NASDAQ goes to all-time high, a reminder that those other positions that are not at all-time high yet, even the mega caps like Apple that are still like 8% away from its high, they would explode. That's not technically supposed to happen here. This should be take profit city, but we're betting on it's going to be different this time. That we're going to keep pushing through the move here. I mean, whether it happens or not, it doesn't matter. We'll react, but that would certainly be quite the payday. Looks good so far. When we look at things like semis here, right? Semis are a little different. We have different price action going on in here. When you look at them, they're a little different, right? So maneuvering through this, a lot of this is just continue to push the position, and that's most of these trades were not in a very short term. I mean, there's still short term, but there's obviously some understanding of coming out of the lows here that there's going to be some sort of move here. I'm still holding this position. So, for instance, taking the out of here, you're able to hold through that. Whether or not I'm going to get pushed out of this position, we'll see. But this is the kind of thing where it depends, and you're making different decisions. And if you take it from the low, you're able to withstand this move. Whereas if you bought up here, you can't. You'd have to exit that position. And again, that's where as that moment comes, you have to take it, because otherwise it becomes difficult. Then you can. There's obviously plenty of other shit to buy, but again, this should be a take profit day here. This is 2% off of in the middle of a rally. This should be a technical take profit day. If this shit continues, we're bullish out of our mind, and that's what we're betting on. That should never happen unless we're out of our fucking mind. I'm betting we're out of our fucking mind, obviously. I am out of my fucking mind. VA still trending down. That is a difference there. Aerospace and defense, again, the value side has definitely lost its heat. We just understand that this is still trending and still very, very much strong, right? Dell support, I have it on the chart. We understood this is pulling a support. We tried to make the trade work here, and then we get stopped out, and we said, oh, I guess we're getting the support buy after all. We'll get the support buy there. The travel side, all basically doing the same thing as the value side's doing, right? Almost all the same. We did take a very nice trade. How you time that and how if you're able to continue it are plenty of different things. There's plenty of it's a fucking mess, right? If you're able to take profit or if you get stopped out, there's so many different things that could happen in here. Most of them, there's no one is holding through anything. So it's like if you did buy this down here, I know you didn't hold through this. So again, but it depends on where you entered because some of this shit is a mess. If you were here, you 100% took profit here. If you entered here, you definitely got out there. A lot of different things, right? And so that's where, again, it just comes down to getting to there and then you make decisions. Brian mentions MTCH. Software companies. Software companies were a big thing from last week. All of these are going to continue. This looks very much like the others as well. Coming out of this break here, looks like it's breaking that right now. All of those software companies look very good. However many more points they put on is obviously the question, and that's what we're looking for these next kind of 2 days is to see if that if we get those take profit days or if they just fucking continue, right? That's most people will not bet that they'll continue on the move, right? That should be just because that's sort of the way we operate, right? You don't expect continued price movement. PLTR did get the retail take profit there, to be expected, but I'll continue that position. We'll see how that does. Where are we on? A lot of things popping up towards the time. EK continues. Oil hasn't moved. Retail stores continue doing pretty well. That crazy Friday from Levi's, we'll see how that does. GRWG continues. Again, that is the preferred hot stock. There's really not a better option. We keep going on Triple BY. Again, okay, fuck, I forgot to mention from pre-market. I mentioned it plenty last week. This is the last week into April monthlies, right? Last week into April monthlies. We are going to still see squeezes, gamma squeezes, but again, you would need acceleration to continue to the upside, or else you'll get pushed to the downside from market makers selling. So if the acceleration doesn't continue, what's going to happen? Well, market makers will start to sell because they no longer need to be hedged against some of those calls, right? So keep that in mind because you start to get take profit, then there's going to be more take profit to follow it. Just like if you get buying, we know there'll be more buying to follow it, right? Because we know there's a factor here of coming into this last week into expirations that you're going to get fucking momentum following it from market makers, especially if it's on tickers that are predominantly traded through options. Most are predominantly traded through options, but there's those tickers that are almost exclusively traded by options. The only people buying the underlying are quite literally market makers, institutions, right? And those are mostly meme stocks. BABA continues very strong, very nice price action. This shit, there wasn't really much to say. Discovery, Viacom, these all opened break even. Viacom is percent. We'll see how those continue. We obviously took some trades there. TME selling off the start because it did do a little bit better to start the end of last week. Those are the Archegos trades. AVTR continues. What a great trade that was. This again, this kind of trading here is disgusting. It's really disgusting. And again, this is why we trade in these and operate in this kind of area, because you don't get exposure to this on a long-term trade. You're getting exposure to everything. Short-term trading, we only traded it while it broke and is on this path. All this is nothing. You're not making money at all in here. And then you bet on this move to happen. It's not always going to be this pretty, right? It's not always that I draw some fucking stupid lines on a chart and then it moves in a straight line. Obviously not. But it's when you do take those trades and you capture that, it is the reason why you spend all the time looking for this kind of shit where it does nothing. It doesn't even ever look like this, and then it looks like that. That produces results, that produces profit. And betting on it to continue is such a underrated sort of thing because of the whole new momentum trading era that's fucking overtaken us. Doing our work. Twitter got rejected on the resistance here. We get converging supplies there. Again, I already took profit on Friday. We'll see what this looks like. To re-enter this trade, I talked about, you want to get into the channel here. So took profit on the resistance here Friday. This trade here, you want it to get above this resistance in there, or you're going to be swinging around, right? Swinging around. It did gravitate to those converging levels of supply, though, which is to be expected. But again, that's a transition trade. You're waiting for that next entry. Retail stores do continue. UA is definitely one of the better ones. That's the high right there. I thought this was the high. Oh yeah, we had this fucking day here. This is an interesting chart. It's very much like the rest of them, where I talk about this diamond idea. Obviously, I post a lot of symmetrical continuation triangles. Most of them are coming from this idea here, where it is basically a diamond, but it's part of a channel. I've been just posting this. I've been just posting the right side because it's a little bit more aggressive idea. Everything that's in this sort of consolidation, this is the next tier of trades that we're taking, right? Some retail stores are there because they posted a lot of big gains here when we took these trades. They got into their highs a lot quicker. So there's an understanding that we have those trades coming up sort of now, right? It would be this week if we continue in this move. A lot of that is what we're buying. If there's a pullback and we get a consolidation like in a normal sense, like a normal technical pullback. So if we pull back this to start this week here, maybe like two take profit candles, then they may not specifically be what we trade because they probably will take bigger profit. So we'll see what that looks like then. We don't need to guess now, right? But we get there. XPEB 3.5. Get some take profit starting here. Back to where we are at the open. Retail stores. Wonder why that's going up. We did take WBA on Friday. No particular reason. Absolutely zero reason. Was selling and selling and selling, and then we went, you know what? Let's get involved. Let's get involved. So here we are. It really makes you wonder sometimes. It really makes you think that there might be something else going on. It really makes you think. Again, based on data and everything else we've seen so far, and based on some other artificial options action, the last week leading into a large amount of options. So sometimes it's weeklies as well. But so for monthly options, that last week leading into expiration is the one in which we get the most activity by market makers reacting to how much they need to hedge against that delta. So the delta hedging increases its volatility, whether it's increasing the underlying position or selling the underlying position, because it's in that last week that the exposure is basically at its highest. Because again, you're getting to the point where now it's like, okay, well, we're gonna have to start to put these on to mathematically be able to buy enough shares to protect against the exposure to the upside, right? To cover them. And so it's the same way on the sell side as well. So that last week really gets going. We started to see it Friday, right? We started to see it Friday. And so then on Friday, as soon as they see that and we get in reaction that we know it's from market makers, that's not normal trading. People don't just trade when we you can see it, right? We talk about that price action. So we get some of that Friday, and so we started to put some of these trades on specifically only for the gamma squeeze idea. We start to fucking load the quantity up on dumb calls, right? Just to get it going. And again, it doesn't take very much money. That's one of the funniest things is that I can sit here and just buy a large quantity of calls, and something will happen, right? Something will happen on the underlying, whether it continues the move or not. It's just the fact that something does happen. Fucking Indiana Jones, that fucking chain. Retail stores continue to do very well. BGFV is a very silly chart. Very silly chart. This kind of price action here is disgusting. But something like this here is very bullish. WBA is a retail store as well, so. Some of those bets finally coming in on the volatility side. Pushing that up. What a dumb. We need new volatility metrics so badly. Somebody's got to make something. It's really bad. We're just so fucked on volatility. We should honestly make a market wide what should be done. Maybe I'll do it. Just for us. We need a IV index for options. Like a market wide IV index. Technically that's what the VIX is, but it's only for S&P futures. What we need is, instead of just S&P futures, we need the whole market's options volatility. All of them, even out of the monies, and deep in the monies, those need to be included, not just at the monies. In the whole thing, all options are calculated into a volatility index and use that. Because if you did that, you know where that fucking thing would be right now? It would be the tallest building in the world. This year would have just skyrocketed. It would look like the Eiffel Tower right now, but if there was only one leg. Market's still holding here. Very strong. Very strong. It's not taking profit. All it is lower volume here. So it's removed some of the demand at the high. We're still right at all-time high. The Dow just sitting here doing fucking nothing. So this is still a position that you just sit in and do nothing. Growth is the only thing that will, I've talked about it, will be the one that will hurt you. Growth will definitely hurt us if it takes a lot of profit, which means we'll have to react, right? That's definitely the area we're watching for. Since our newest positions, of course, are there. But this is even tightening here. I would even put day trade there. Say that's going to go up. Day traders are us over here going, oh, I'm going to buy it right here. I would. I would buy it right there. Good probability. Things like mega caps, whether or not these are going to... It's hard to tell if there's... This is predominantly the volume, but this is take profit here from short terms, makes sense. But there's so much liquidity over here that they're not gonna. It's just not. This is not gonna be the case. It won't be. So See what this looks like here. Here, give me one moment, guys. Ready already. Jar mentions app support. Apps is down at support, 82.5. Again, we took that, took this trade on this idea of a trend line here. This is now sold since the trend line, giving us some ideas that we're still within this consolidation. This didn't actually even break out of it. I just posted the chart because we talked about it so much, just to give like the perspective idea. This obviously didn't actually technically break out. It's still within the trend line. We'll see what this turns into. That's excuse me. It's definitely a very good spot for support, and I talked about this idea in other places as well, that I'm willing to take trades like this here, depending on the ticker. This is 4.5%. I'm pretty aggressive right now. I got no real problem with that. We've seen this multiple times. I got no problem with that there. No problem. I do want to, now that we're kind of out of the open a little bit, I do want to mention Bitcoin a little bit. Obviously, Wednesday, Coinbase is going live. IPO'd on the NASDAQ. I don't trade IPOs or anything like that, but again, Bitcoin continues to go to the high, and it's about to get back to the all-time high here. What this does on Wednesday should definitely be interesting, because we've never really had, this is going to be the first time we've ever had a situation like this, so I mean, we're going to have to just see what happens, but it apparently institutions can't stop talking about how to get exposure to the crypto market, they're going to invest in Coinbase instead of buying Bitcoin. But I'm pretty sure that's just some fucking game theory, because that's ridiculous. And so I don't know exactly what that means, because I keep seeing that, but I know that's not coming from like the mouth of a CEO or something, because it doesn't, I understand the concept, but that's not what they're doing. So I don't know exactly what, again, I don't trade IPOs anyway, so it doesn't really matter to me, but I imagine that price action is going to be a little different than what's being expected right now. And I'm really curious to see what's happening here. Again, everything is the same on Bitcoin. It's still in that trend, and I still expect to get to 100K, and everything else. Right? It's extremely bullish, and I can't even believe the way it's traded since I made some of that prediction, and some of the model, and the model's still working very much in the case, and the institutional demand and everything. I mean, we'll see if they're going to buy. Since they didn't IPO, they DPO'd. They're going direct. It is a little different. They're not going through an investment bank and shit. So we'll see what gets bought on Coinbase, and whether this makes a move. Whichever thing here makes a bigger move will be interesting. And it's not like Coinbase. You're not going to get a. It's like buying a Bitcoin ETF. It makes no fucking sense. Just buy Bitcoin, right? So there's definitely a reason that Coinbase has made a shit ton of money. I would separate it though. The idea that you're getting exposure to Bitcoin by buying Coinbase, I think, is a bit of a phony idea, and I think it's purposely being perpetrated like that, that's not really what you're doing. You're buying a company that makes a fuck ton of fees, and that's awesome. They make a ton of fees. They made like $1 billion in the last quarter or some shit. Again, they're whatever, but it's not the same as getting exposure to Bitcoin. Just to say that, because that's an important thing that people are not going to do. There's going to be people that own Bitcoin. They're going to buy Coinbase because they think they're just getting more exposure to Bitcoin, but they're really not. You're really not. You're just getting exposure to a company that has a bunch of users, has increased in users, and making a bunch of fees because of that. Coinbase, I use Coinbase. They charge a fuck ton of fees. I don't trade it, at least, so I bought it once and that was it. But when I'm going to have to take profit, they're going to charge me a fucking assload of fees, right? That's just what they make money on. Don't think that they're the same. Do not think that they're the same, because that keeps being said. I don't know why that keeps being said. I have no clue. No idea. But it's going to be really interesting on Wednesday to see what happens with that, because we haven't really got one of those, an IPO like that, in a little while. Something that's significant and also has very different exposure. And the crypto idea is such a new thing. Very new thing. At least in an institutional perspective. It's obviously like new as in Bitcoin was just made in the last decade, but also institutionally, it's been like in a year. The last year, institutions started getting into it, and the only reason they did that was because of fucking COVID. Because they had to put on huge reserves, like fucking $10 billion worth of reserves, and as soon as you have a lot of money and cash, everything's an opportunity. Fucking throw it into Bitcoin. Counts. That counts. So timing is very not suspect, but the timing is very fragile and being important. And we see what that looks like. Definitely volatility city this week on that end. XPEV just is doing the rest of the growth move, just with extra volatility here, bouncing around. Fun chart. Fun chart. What this swing to the upside looks like. Again, we'll get some answers here as this swings back up. DTS, funny. TSN swinging back up. We'll see what these look like. Because you could get swing back up and then swing back down. We'll see whether we're gonna have a break even day or this is an actual whip back up to the upside and we actually get some sort of move going here. It's 10 o'clock. See if the big boys jump in here. Pretty bullish. Everyone buying Baba. What a dumb trade. JR mentions Netflix. Yeah, Netflix is interesting here. Netflix is definitely very interesting. Again, we talked about it. You just had to take the trade. I talked about you just hold this trade. We didn't get a gap up, but it is just in the same zone and it's through the resistance. And again, you are holding, and every time we've taken the Netflix trade, it's been like this. You're never going to perfectly time anything. Like sometimes you will, but you didn't perfectly time it. The market gave it to you, right? And we buy support. You don't know it's specifically going to move from there. So we buy in this supply here because we're expecting it to break through and then make the move. But we don't know when. And so I talked about it over here. We took the trade. And every single one of these days I kept saying, well, maybe it'll gap the next time. You're taking it for the probability that if it makes it through there, it's going to put a lot of points on very quickly, right? This gap here was earnings. Whether this happens before, after, I mean, it doesn't really matter. We're betting on growth to be up. It might sit in there and it's going to do this type of shit a lot. It's going to bounce in here a lot. Let's see if that's it right there. See if that's it. Yeah, Roku's pretty silly. Pretty silly. DC does continue. those industrials look very good. Again, really just watching this, trying to see what exactly is going to happen here. It's again, we're starting slower again this week. It's important to realize why we're kind of doing that, because again, everyone expects prices to be up, but no one's expecting that the move should continue in the same violent way, right? We might, if we get those, if you think about last week, we got those 2 sideways candles, but there was no take profit. It's just sideways price action. If we do that again, then everyone is going to expect that that goes upside, right? So that's what even if you get those sideways candles, that's what I mean, is that as long as it's not a take profit, then that means we're going to the upside. We're break even right now, which again means we're not taking profit, which signals to everybody that we're continuing. And then there's going to be momentum in buying, and there's a lot of money out there. We know that institutions still want to spend that cash that they have. They put so many reserves on for COVID. Again, we're talking about billions and billions of dollars that have yet to be spent, and they're going to spend a little bit on treasuries, but they're going to buy stocks. Unum over 2% now. Uber in the same spot as the Nasdaq, is just holding there. Tesla continues its bid here. Very nice trade. I mean, again, if you don't take the trade, then you don't make it. It kind of sucks. I mean, I guess it doesn't suck if you're making money, but it kind of sucks, again, if you don't take the trade, is what I'm trying to say. And then this comes back to the idea, again, where everything looks easy when someone else does it. And that's why I take the trades when they come, because I hate that feeling. I hate that fucking feeling. Because if I don't take the trade there, then if something does happen here, you have a bad feeling. It's not even that many points. It's not even that many points, because this is like 30% up to the high. It's only 4%, but it just feels bad if you don't take the trade there, because yeah, that's it. Again, it could have gone lower, sure. But if you don't take that risk and pay for the risk, then you're not going to get paid on the reward side, right? It's not easy. You're never going to time. Again, timing's never perfect. Timing's never going to be perfect. Sometimes you're going to get fucked. Sometimes you're going to make money. Never going to be perfect. But the one thing for sure is that if you don't take a trade, then you won't make money. That's it, right? Just whether you can afford it. Can you afford it? That's where it's really beneficial to go make a lot of money and then go start trading. And then start from a place of, okay, I got some money here. Where are we on? Continue its move down. Where are we on G? Tesla taking most of the demand. That's something to keep of note, is that just like mega caps stole demand from the rest of the market, Tesla is stealing the demand from the other tickers that we look at on the EV side, or at least the automobile side. Okay, we are getting the regional banks a little bit. STL, very nice move so far. Again, these are the trend lines and everything stands out very clearly. The tightening stands out very clearly. Again, I'm just posting, again, just drawing the lines where the price is, right? It's not like no one else is seeing it. It's the same thing. It's tightening, and then it's pretty damn obvious, and that's why we take the trade, right? When it's obvious, and we take the trades. It doesn't mean it's easy, but it does stand out. And again, this has been pretty slow on the regional bank side. It's been pretty slow consolidating. We made a significant move through here, and this is when we were trading all those small cap banks and IWM, right? All the Russell 2000 kind of idea, and then it turned to the large cap side. Some of them on the different different pace. But again, when you look at this, there's nothing here. We're not looking at this because, again, you can even see how this is down, but I know that most of this stuff is actually up. So I have no idea. Most things still sitting around that break-even mark. Low volume. Doji'd. We're chilling. We're chilling. We're going to be hanging out. Definitely, we're definitely getting that a very similar price action to how the beginning of last week started. The beginning of last week looks a little different because the way that this intraday candle looks, but we actually went flat here. That first 3 days we had low volume and traded flat. We still were buying in bullish through there. This is very similar. It's hard to continue to be in that sort of mentality because we did that multiple times here. But you have to keep that idea in mind that, okay, you may not do something for a couple days here. That doesn't mean that you're not holding in a buyer, right? Yes, there's nothing wrong with taking the profit, but there's definitely some of those ideas still that there is plenty of reasons to be pushing those positions because for every point above, you're going to be making a lot more because of the risk, right? So again, remember that this candle here is not take profit, and that tells us through our idea that is bullish, that there's more upside here. And for every percent above here, you're making probably twice as much as back here last week. So again, if it takes 2 days, there's a lot of positions that we have 2 days to hold on, right? Mega caps, you have 2 days. You can have 1, 2, and they could just trade flat, take a little bit of profit. You can push that position 100%. Because then if you get 1% over here, 2%, again, to follow off the end of the week, then those 2 days were worth it. But again, if you have short-term contracts, you need to price in the timing there. You need to price in how much you're going to lose. You could be trading flat and lose 20% off the top here. Can you make a risk-reward idea for losing 20% here in the next 2 days, even if it trades flat, to then get another couple percent here? How many percent on the tail end would you need to warrant holding here, right? Those are the kind of calculations you need to know. If you have shorter term contracts, the longer it's not going up, the more you're losing, and the more it's going to have to go up on the underlying to produce the profit needed, because you need to make back the profit from that you lost here, and now you need to make up the speed and the time, right, on this side. So for every point you're not going up, you're losing multiple points on the downside, right? Because you're losing time. So there's definitely some risk reward things to think of. And that's why last Friday, I basically took all those positions off so I didn't have to decide today. I didn't have to make a decision today. Today, I have my longer term and my better contracts that can withstand sideways movement or what I would consider hold trades. Expect this to continue going up. I'm a buyer. 33.5 is the trend line on AVTR. That's definitely a transition. I think maybe do it very quickly here. We'll see. As he continues. Yeah, he's still sitting right in between here, but it's very much like the Netflix idea. There's a resistance here, but once it's above the resistance, and very much like those other trades where it's from the support here up to the trend line. That's your trade. That's your trade because it's open space. There should be a lot of velocity produced there. The thing to remember here is that I've been talking about is that if the NASDAQ is not continuing at an all-time high, it's going to be hard for these trades to make that move. When the NASDAQ goes all-time high, which it's right there, what will happen is all these positions like this, that's below their low, they're going to trade in between that range very quickly. They're going to trade this very quickly as the NASDAQ goes all-time high. And we're right there. So all it takes is a little bit more of a push. And then all of a sudden the calculation, again, we're 25 basis points away from the high. We're right there. As soon as that happens, the calculation gets reset and there's no supply on those charts. That Etsy chart there, like JJ mentions the resistance, that disappears as soon as the NASDAQ goes all-time high because this is above it now. That's just going to happen. If the NASDAQ's climbing, then this is going to go up as well. That's just going to happen. So again, these positions that are, or these charts that are in this area where it's in between, it's the best possible place to be, and it's where we make our money's worth. That's where our alpha is in this area. It's not the points that come after or anything. It's in that area. That's where you make your 100%. OSTK is back below the level here. Still up in the trend though. Still up on the day. It had a 9% day on Friday, so the semiconductors are having an interesting day here. Interesting day. Again, they're all very, very different, which makes things very difficult. Which doesn't make it easy. Does not make those trades easy. I should have mentioned ICLN. This kind of thing. Again, this trade again did not work out. Again, it got rejected, which technically it's supposed to, but we were betting that it was going to be gapped or something like that. This again is down. It just continues to trend down. It's just trading in this channel. So we haven't really lost money. We keep getting stopped out because it's the way in which it's trading. It doesn't really hurt you on the ETF side here. And in some of the other companies, again, when you look at some of these specifically, you're actually opening higher and you have time to get out of these and get stopped out, right? You'll get stopped out of them, which is sort of the point of taking some of these. Again, you're not getting hurt on here when you take the individual ticker, right? So is clean energy going? Nothing's changed. The same thing is going to continue to happen. We're going to keep doing the same trade every single time. Again, it's one of those things that it's so easy to lose confidence taking trades that do not work out and to keep banging your head against a wall. But unless there's something better, right? Unless there's something better, then which there are. And again, this is where if it's your one trade, then you should not be making those trades. I already talked about it last week and every other fucking day. If you only got one trade, you only have money for one trade, then there's some very obvious trades that you should take over trying to make something work, right? We're trying to make something work. Our tickers continue to trend where we're not getting a violent amount of flow or anything like that. Obviously, the ARC F is the fintech side, and we have Square Inc. and all these kind of companies doing very well. Came to the trend line last week. We took the profit there, transitioned to look for the next upside move. Again, these areas from support to the trend line, that's your 100% right there. That's where we operate. That side of things doing well. Some of the other ARC ETF stuff, we're not getting like a killer amount of flow, but I do expect those to continue to get flows. I mean, when you look at the numbers, it's just too much. And I don't think we're not getting it really populated on the price side very much yet, because even when price is going down, we're getting flow into ETFs. So we need to see that benchmark still come in. Team making a move here. Again, software companies are so funny. All of these moves looking the exact same. Continuing. Trades are definitely out there. We just continue though, right? We continue. It's 10:21. See, we're still trending back up to the upside here. Let's see if we break through this high and we're not at we're only 50 minutes in. Are we gonna get here? The other thing that we have is on Friday, we have China economic numbers, which, I mean, I'm pretty sure everyone already knows. So we kind of already know that the numbers are good based on everything that's going on. But what that means in terms of China's tech, again, is still the up in the air thing, and that's because of regulations and everything. The BABA thing definitely helped with getting that off the plate, but there's still questions about that whole market, how the Hang Seng operates with that as well. It's just a volatility sort of event, risk event. That's all. It's not like, oh, the numbers aren't as good, the numbers are worse. That doesn't really matter. It's just that there's going to be more volatility on that Friday, which does make those trades more interesting to push over the weekend, push into Friday, right? We're sort of pushing trades to Friday on the China side. We've sort of already taken those trades. Some of them didn't work out. Some we'll have to retake. But I do think it's definitely one of the uh, better trades because you can get stopped out of them pretty easily. They're very liquid, and then the upside potential is significant. It's just a lot of points to be able to pick up if that does get going, and we're never going to time it perfectly, so we have to just keep taking it. Because again, it's like it would be like not betting on the market to go up at any point in fucking history. That would be ridiculous. Trade it. It'll go up. You may not get it the first 10 times, but if you get it the 11th time, you'll make money. Be worth it. Again, if you don't have enough capital to do that, then you should not be wasting your money trying to buy Chinese tickers, but but it should be obvious. Listen, man, I'm eating ramen, but I'm trying to buy options, complex derivatives. I don't have enough money for food, but I'm spending all my money on trading. Saw that meme on Reddit the other day. I have 20 grand in the market, and then I've got $100 in my checking account. I'm fucking poor. I saw that on Reddit. Made me laugh. I mean, it's technically true. You should try to finish like every month with break even amount of money, like $1 up, because the rest of your money's being used to trade, invest, and then the rest is your usual obligations, right? And expenses. I spend all my money on my apartment. Still trending. Still trending. We can take a look at banks here. Banks are in the same spot, but these are at a high. These are up. See if those are reaching there quicker. Energy's pulled back a little bit. Now going. Nope. All the IT shit. Definitely funny. We'll see what this does when it gets to the trend line. I'm not really sure what to expect. 550 comes in. We'll see. Most of these I'm expecting the Nasdaq to push all this stuff to make the move. So there is a little bit of a difference with some of these new tickers because a lot of the new tickers, a lot of what's going to make that velocity come in is the Nasdaq going all-time high. So some of the charts are a little different than the idea that they have their own velocity. That's probably something to keep in. I mean, that should already be a given on the growth side because we understand that it's predominantly just the Nasdaq itself doing better that's causing growth to do well. It's not like a specific area or anything like that. Again, these tickers like Chewy Zoom, This is going to be the next tier of tickers that we're looking for on support. Not time yet, but it's almost time. Almost time. X continued moving down. We didn't get anything from Friday. Something to keep in mind. Very, very institutional. This is, again, selling from the actual proposal of the industrial bill and everything like that, the spending bill. So definitely some news trading still in there. Yeah, home builders is still strong though. That's a good point. Home builders is still strong. All of these keep trending. I mean, this has been a good trade so far. This is definitely one. Again, these trades have been are ones that we've been a part of for a while, trading different ways. HR also mentions XHP. All of them, all trying to. I mean, those ideas from when we took them and from how they've continued. Most of these trending charts, you haven't had to do much. You haven't had to do much. All we've had to do is react to short-term volatility. We had to react over here in this area, but this is basically when the Dow started, and that's when we started all this betting on government spending, right? Chewy is just right here with all the other tickers. It's just a whole heap of support. This whole zone here. There is nothing else, right? There's nothing else over here. It's just all this local support. It's just a whole zone. Whole zone. It's not so much, oh, you're going to buy at that level. You don't have any clue what the timing is. It's just going to come out of this area, though, right? That's it. That's all. Same with Zoom. It's just me a little bit more specific on Zoom, but it's the same idea. All right, it's coming out of here. It's going to go to the upside. It's just got a whole level of local supply, right? That's it. XDMXing. No. Google's still holding up here. Very strong. Facebook. Still holding. Very slow start to the week. Trading flat, right at break even on the day from the open. We'll see how much volatility comes in once volume starts to get removed. We're starting to get it there now. Again, we're now an hour in. I mean, we didn't get much movement, so now you're not gonna get any of the momentum traders come through. No one's day trading anything because there's literally nothing to day trade. No one's putting long positions on because they're already in long positions and would have put long positions on. Now they're waiting for close. Unless there's pullbacks, people will buy pullbacks most likely, and we'll be able to get confirmation of that. Otherwise, we're trading flat here, continuing to move, being patient, right? Being patient. Not getting in our own way. Market's not getting in its own way, obviously. Market's definitely not in its own way right now. Like the only thing that's really had moved today so far. Uber here. A lot of this, again, almost everything's pre-market action. That's it. If there was any. So very patient start to the week. But the fact remains, we did not get take profit, which is confirmation, the 100% confirmation of continued upside move. Absolutely. Because we don't get take profit today, why would we take profit tomorrow? Why wouldn't you just do it today? Why didn't you do it Friday? What changed? Nothing's changing these next 2 days. We get some earnings on Wednesday. But what's going to change in the next 2 days? I mean, not even to bring up like a news idea or event idea, but it's just sort of this, again, the pace of the market and everything we're in. There's no reason to make up ideas today unless we get price action, right? So volume's getting removed. So we'll see what side that removes it from. Most likely demand side, right? Most likely the demand side. Otherwise, I mean, the only thing that will change are the auctions. Those are the things. Yields, short-term yields are rising. That's to be expected. To be expected. We'll see what that looks like. We do have a 10-year coming up. We'll see what these look like, right? On it, I mean, it's over the next 3 weeks. So, I mean, if we do, okay, let's put into a situation where growth does get affected by yields this time. We're already a part of the Dow side of things because there's a lot of tickers in the Dow that are very bullish and really nice to be a part of. So we're still in the long-term part of the Dow, and we already understood that inflation is going up anyway, and there's going to be spending, so there's no reason not to be long on those positions. You don't even get affected on the downside whatsoever, right? So you should be a part of those positions. What's going to do well if yields rise again? In the situation where that growth gets negatively affected, value is going to go up because that's where the money is going to flow to if it comes out of growth. It's not going to go out of growth into the dollar. It's going to go, and it's not going to treasuries because people are selling treasuries if yields are going up. So it's going into value. So the Dow will start to do well again, and value will do very well, right? If growth gets negatively affected. What does that mean in terms of timing? For the next 3 weeks, there's hundreds of billions of dollars worth of auctions going on. So that would mean if today, the next 3 days, auctions cause this negative effect of growth, which I don't expect it to, but let's just say it did, then that would put a timer on the market for basically the next 3 weeks. That would mean that if today or this next 3 days gets negatively affected on the growth side, that people would be pricing in that the next 3 weeks are going to be volatile for the growth side, which would be the consolidation under the uncertainty idea. There would be uncertainty in growth because we got negatively affected by yields, which would mean we're already in the value side with the Dow, but we would put everything from growth into that value idea and keep it all on that side instead of how we're trading now. That would be how we would handle that situation. So it would just be take profit on growth and go throw it back into the other ideas of banks and energy and everything else, right? Into all of those value tickers. That's what we would do if we get negatively affected. We would then look for very short-term ideas on growth where we could take the trades, but again, we wouldn't be guessing. If it's entering consolidation, then we wouldn't be a part of it. I do not expect that. The market does not expect that. But just how we would react to it, right? That's what we would do. And maybe there would be, again, I posted a lot of gold charts and stuff like that lately, silver charts. The dollar is coming back down. If we did get removed a flow out of growth because of yields, then it's very possible it flows into gold first because there's basically nothing in there right now still. So I'd definitely be looking for that and crude to be going up in relation for sure. Because the dollar keeps going down and see what that looks like. But that's if that comes, and then we'll look. Also, China is a possibility, would be a possibility there. But they do get negatively affected by yields going up because their cost of capital goes up because they're big on treasuries. Again, the foreign market is the largest buyer of treasuries, no one else besides the Fed. Foreign market eats up treasuries. They're just better. No one else wants their own fucking government's bonds. Want the damn U.S. It's pretty good yield now. They're looking very good though. Very strong. Everything's holding, trading flat. Not getting really much. Take a look. Let's take a look. Still not a long term. We just keep taking the short term when it's there, and then if it's not there, it's just not there. $110 fucking percent. That would almost be in terms of my Bitcoin position. My question now, so if we put this into a portfolio standpoint again, right? So my average is about 9,200 from back here in June. I loaded up about 10% of my portfolio. 10% of my portfolio right now is Bitcoin. And I haven't touched it. I haven't taken profit. I was adding profit. So when I started buying it, then I started adding my new profits when I made a majority of my money back here in the summer last year. It was like, again, like milestones being hit over here. And then I put the profits into Bitcoin. Haven't touched it. I have the $100,000 Bitcoin idea. Okay, we're up. We're up over, quite a bit. From 9,200 to 60,000, right? 9,200 to 60,000 is a lot of fucking money. Now, how do you go from here, right? I think it's still something that needs to be thought of because this is a lot quicker. And those of you that are in the situation as well, I do expect the 100,000. How do we trade it through here? You really could just keep pushing the position, and my idea here is really, do I want to take the 1,000% gain right off the bat? Let's say we reach up there, close to 100,000, right? Do I take the 1,000% right there and say, I just made 1,000% on basically all my money in a year, which would be insane, right? It'd be an insane amount of money. It'd be like the first time I ever made that much money on one trade, right? Let alone anything. So there's a lot of me that wants to just do that and just take the money there. But there's a lot of me that still says that maybe I'll just take, half of it and keep pushing that position further. I think those decisions need to start to be made right now because you don't want to get to the point and then try to theory your craft then. So it's like, this would be the question for all of us. As we approach higher and higher on Bitcoin, if you have a large position like I do, and this is my investment. This is going to be a long-term thing. There's also a factor of capital gains to keep in mind here because those will come into effect after the 1 year mark. All my trades are under 1 year, so again, they're just normal taxes. There is a portion of me that wants to hold things over a year. different taxes and everything like that, right? So there's definitely reasons to this is an investment to keep pushing it, and Bitcoin should just keep appreciating anyway, like any other stock to flow sort of asset would with appreciation. Gold keeps appreciating. Yeah, sometimes it has short term volatility over a year, comes down, it's volatile, but it continues to go up, right? So that's how Bitcoin should seemingly operate. But here's the question: is can I make more money with that? If I take profit on, let's say, half of it or even all of it, could I make more money on that money that I'll now have available to me on my short term trading through options than I would by just having it here? And my risk reward, is the risk worth taking all of that to go put it into options or something else and trade it actively? Can I actually utilize that? The answer for me is that I can't utilize any of that money. I'm already maxed out on how much I can trade. I've talked about it before. It's like very difficult to trade more than what you have. So some of you, the answer is you're not going to take profit on it so that you can make more money on it than you would on Bitcoin. That's not a reality. Most of you, that's not a reality either, because it's just you can't actively trade that much money. Not in the trading we do. Maybe you can go put it into stocks and shit like that and put it into longer term trades, but definitely not short term trading. So I'm definitely not going to use any of this money for short term trading, right? Definitely just having cash is definitely a thing. This is where that weird part comes in, where there's like ideas of, okay, I can actually spend this money and use it for something. Some of you do that kind of things. We have people in here that bought a fucking house with the money they made. That kind of thing happens. There's things that you can use the money for. I don't want to do that too much because I want it to be as raw as possible, my decision making. So it's like there's nothing I want to spend it on. I can't make more money trading options, so it's not worth it. So it's just going to come down to, again, there's like a risk reward point where I think it's just going to be feeling, and that's how things kind of happen, right? That's how things I think happen. Is it depends, and if I'm not going to use the money for anything, but I'm going to take the gain and not risk it, then I'm not going to be mad at myself for making 1,000%. That's for sure. And if it keeps going up, then I'll have money still in there, right? I'll have money still trading it. But I think there's going to be one of those harder trades that's going to eat at people, and there's not a right or wrong answer. I don't think there's a right or wrong answer. It comes down to yourselves and maybe what you have for utility. Maybe there's a utility aspect again of, okay, I can do something with that money more useful than just having it appreciate over time. And usually I always think about the spending money now is better than spending it in the future. I'm not the kind of person that is going to make money over 5 years to like buy something 5 years from now. I do it right now or I'm not going to do it at all. I'm going to be a completely different person in fucking 5 years. Yeah, I'm going to be consistent every year for 5 years, but I'm not going to fucking wait for 5 years to do something. That's just not who I am. So some of you might be a little bit more longer term. I'm a little bit naive and irrational in that standpoint. So I think taking 1,000% is good for me. 900%, okay, I'll take it. Right. So there's definitely questions coming up and looming, and if there was another opportunity to use that money for something, then I would. I think there would be a part of me that would, let's say I want to, like, again, I have some ideas of maybe buying something here in the city again, then I would do it if it felt like. And I think that's the difference between investing and the trading we do. It's probably a good, important difference between taking these short-term trades and this is my income. I'm trying to make money, every month to continue doing it and to pay for myself, right? But those investing ideas it's a different vehicle. And the investments do sort of loop back into each other, one investment to another. And it's over time, and you don't think about short-term ideas. You think about like a longer-term idea. I mean, I think you have a little bit more room to maneuver on that. But I would take into account yourselves, and I think it's okay to. Like when we take these trades here, we should not be taking into account making back money, like revenge trading. Like, I lost money last week, I better make it up this week. Or, oh, I'm going to be down on the day, I better make a trade to make up the money now. We should not be doing that. Absolutely not. And it shouldn't be, oh, I'm going to buy something. Let me go take profit on this position that's still going up. Should not be like that at all. On this type of trading, there should be no outside forces affecting your mindset on this kind of trading. On the investment side, it's been almost a year now in that trade. I have no problem making decisions on a more, I would say, qualitative level, right? And I think you should. I think you should in some way. And it's exciting. I don't know what I would have done if that trade didn't work out, to be honest with you. I mean, like, oh shit, that kind of sucks. Still holding that level here. Growth side took the most. We're at 0.5% though. We're still right here at the level, coming a bit off the low. I mean, we're just, again, volume coming down, losing demand, which is to be expected. The the reason why we know exactly how the market moves here when the volume goes down is because we know that the supply side and all the liquidity is market makers. Because when you're at all-time high, there is no technical level of resistance or supply from people like you and I trading. We're not the ones selling. It's market makers providing the liquidity on the sell side, right? All market makers providing liquidity. All of everyone else, we're all pushing long trades and buying up the long side, right? This is the selling and everything else, again, is really not made up of you and I. At least when we talk about volume being removed. When volume gets removed, it's removing the demand side because we're just not actively trading at the moment, right? That's it. That's all that is. Whether or not there's more sellers or buyers, that's the question every day, right? Of course. But there's not outflow. Not outflow. The other thing I'm looking at is right now, it's a bit depressing. In some areas in the city, we have like empty storefronts from fucking COVID, and they're cheap. They're cheap. It's time, boys. We take a retail store. We talk so much about retail stores. Are you getting a retail store for Greasy Finger Mobile Traders? Yeah, I'm gonna open up a T-Mobile franchise. Hire the family. I just want to be a slumlord, man. I just want to be a slumlord. Get one of these old buildings, slumlord. It's cheap. I mean, it's not expensive. It's really weird to think about, but it's like really not that It's really not that expensive for some of these buildings. Like we're not even talking more than $1 million. We're talking like 500 grand for a fucking building, like a older building. It's weird, but like that's some of them are like actually like that. It's very, like, I'm talking about Manhattan. Like, it's very strange. Very strange. You hire a property manager? I have no fucking idea. You would have, again, it would all be through leasing and everything else. That it would basically be like I've done nothing. I just now own something. Obviously, I would have other people do it. I have no idea how any of that shit works. That's for sure. It's like me trying to tell you how the fundamentals work on. We can all say that Apple sold more iPhones. None of us really get it. We understand what makes they make more money. Yeah, I would not be doing any of that. The only way I would actually do anything like that is, uh, some I used to run some bars here in the city, and that's like one of the most enjoyable things. Hanging out with your buddies, managing a bar, hanging out, having a good time. That's something that I would do, but it's not the right time to do it. That's for sure. I'm not gonna spend all my time doing that, managing a fucking like owning a place and doing something like that. The money's not worth it. You make a lot of money. Your margins are great at a fucking bar. $15 for a cocktail in New York City, and it costs $2 to make it. Perfect. Great margin, right? All you're literally paying are overhead costs. That's it. Nothing else to pay for. I have to pay my employees. They get tips. You just pay for the goddamn place. You just need a good location. Location, location, location. Not the right time, no. One day. That's the next one. Open up the bar. But that's when I'm old and dying and no longer can trade. And I'm an investing vehicle. Put my money in long-term trades. I'm done. We're close. Really. Is this similar? This isn't similar to last Monday so much. It's similar to Tuesday though, which is they're basically the same. It's basically the same concept from Monday's price action. Monday was very much like Friday's price action, and then this would be Tuesday's just trading flat. Even less volatility though than last Tuesday or Wednesday. We were swinging back and forth still there. Here we're a little bit. This is a little bit flatter than that. A little more short-term chop, but back to break even on the open where we are. I mean, I would say the market's pretty set. Everyone's pretty in line. Again, we're we kind of expect that the market's more connected and then everyone sort of understands where we are because of where the price action is. It's not so much that everything's on a different wavelength right now. Everything's on the exact same everything's trading the exact same way. So it's when things start to drift apart that we start to see it, and then that's where shit gets going. Right now, everything's the same. You don't need to do shit. There's nothing to watch right now, nothing to do. That's the kind of trading you want. You make trades and then you don't have to do anything. You don't want to be wasting your energy watching things and looking at things. We can turn this shit to 15-minute. Don't need to do anything here. You're in trades. You made decisions. We understand how we'll react if, again, the whole reason of having rules. We give ourselves rules and we have a method and discipline. The whole reason for doing that is because we don't need to know what's going to come next, but we'll always react the same way because of our rules. And that allows you to not make mistakes. You'll still make mistakes through this idea of not being perfectly timed, of course. But by having rules, you set yourself up so that you always react the same way and you always get that practice in. You're always doing the same decision every single time. Oh, I'm getting the same candle. Here's how I react to it, and that's it. Right? We don't need to know what comes next if we've done it 1,000 times, right? That's why we have rules. The rule sometimes it will hold us back, but will never hurt us. So that's why we sort of trade the way we do. And I mean, we also have a very fucking risky strategy. So I mean, it's not to say that we're not taking as much risk as possible, but uh, you know, it's important to limit ourselves and what we look at. And not that we don't look at everything, but again, the rules to keep us in line. It's important. Stay disciplined. No one should be getting antsy right now to do something. Again, there's investors out there that they invest for over multiple years. We're swinging over a couple days, a few days, a couple weeks at most. If you can't handle one slow day and you're antsy to do something, then how? Yeah, Jesus. It's too much. Gotta be able to enjoy some relaxation. I'm sure there's all kinds of shit moving today. I'm sure there's something. Let's go take a look. What's moving today? Or what's active? Well, we already know Nuan. We already got Nuan. We're already looking at that. That gapped up. What else we got? Ears. Look at ears. You guys want ears? Look, you could have got a part of. I guess not. Couldn't get a part of ears. What about Jesus. What about this? You guys want to go trade some of this dumb shit over here? Here you go. WHLM. That sounds like a radio station. And apparently it's been trading down the whole day. And Jesus, guys, I don't think there's actually anything you can. EVLO? There you go. Go buy this, guys. There you go. You guys want to do something, go be momentum traders. I'm just joking, obviously, but that big double bottom here. Yeah, stay in our lane. Stay in our lane. How are we looking on the Dow? What do we got for Dow tickers? Very break even split. VA down the most, continuing that trend of the downside. Banks not trading much into earnings here yet either. Honeywell continues. GS is up overall. GS is on the credit side. I mean, they will just do better. Morgan Stanley as well. Morgan Stanley. Bank of America has been trading most, but most of that's priced. The difference, again, is who's already priced some of the price action to come, and then who is still in an area that they haven't priced much. JP Morgan, for instance, has not priced much. They've been sort of trading in this area for a while. So this is the kind of thing that you're betting on more volatility than this. You're betting on more price movement than this. You're betting on a price move, right? So that would be the difference when you're looking at individual tickers is, okay, which one hasn't really been moving, but they're still going to perform? These kind of ideas, right? Apple did get the historical take profit amount from that 2% here. Yeah, this move is disgusting. Nasdaq, I mean, we got the historical take profit, but again, we're basically at break even still. Not much has moved yet. We're at 11 o'clock. 11 o'clock. Dollar still where it was. Yields. Again, not affecting price. 2-year is the sensitive one that we're looking at, of course. See what that does, but nothing. Very nice. We didn't get. Again, it's very easy to sleep on this candle, this doji right here. But it's so important to realize what even just one candle signifies in an entire move here, right? Even just these first couple hours here. Hour and a half. Okay, so if we do try to go shorter term and think about it, this is melt territory still. Technically, you're an all-time high. You keep melting through the high. That, even though we lose some volume, and it's from the demand side. I talk about this a lot. That should be pulling back somehow, but when you're at all-time high, you technically melt through lunch, and we've seen this continue to happen, right? We see this continue to happen. That's how all-time high works, right? That's how all-time high works. You keep going through all-time high and pushing through it. There needs to be some sort of take profit that takes you out of that trend and that move. That's why if this didn't start off like take profit, then it's going to be the same consistent move through all-time high because you don't have supply. You have no resistance. All-time high, you can just keep trading through. which is why it's so nice to trade in there, but it's not nice to have to actively trade through there. That's why you have to already be in position, and that's why when our opportunity comes and it's our moment, we fucking buy. And because if you're not in a position now, then you hate your life, because what are you supposed to do, right? There's not a good time to buy. What are you doing over here, right? And that's why we take opportunities when they come. It's that all that translates to is price just melting, right, through all-time high. So again, there shouldn't have to be anything that has to be done, right? No one should have to be, again, if you're not in a position, then you just get in one. There's no such thing as, well, I guess I'll have to wait. I guess I'll wait now, right? Okay. So what are you waiting for? Where it's like the same argument from back anywhere in here. Well, I guess I'll wait. Just fucking buy the S&P then. You buy the S&P now, and in a month you'll be up. Maybe not by much. I mean, it's growing more and more unlikely that you break this trend. You can consolidate within this trend, but I mean, beyond COVID and what that price action was there's not much else to see here, folks. In a long-term macro idea, and especially with the Fed buying so much and providing so much liquidity and the amount of spending coming down the government side and the inflation idea that we want to get inflation going, should not be betting against the market. No one's doing it. Going to keep going. So that means at any point, even now, you can be a buyer. And that's what we are. We are literally buyers right here. We're buyers right here. Not specifically buying anything here today, because we sort of already bought everything. But I'll continue to buy as I take profit as well. It's really hard to keep taking profit and buying. It feels very strange, but you're bringing money home at the same time. You have to be able to take profit and buy at the same time while bringing money home. You have to be able to do that. You're buying, taking profit, and still buying. So how are you bringing money home? Because you're making more money than you spent. You should be. You shouldn't be buying and making less if the market's going up. That means you're buying somehow. You bought the wrong thing, and it will happen. But if you buy enough and you keep being consistent, there's no reason why you shouldn't be. There is no reason, right? Again, we're all chimps. We're all just chimps. But even the chimps themselves are making money on the market, right? My favorite thing was the Neuralink thing. Did you guys see that video with the monkey playing Pong through his brain? Holy moly. I mean, that's an older thing. We've had that for a while, but now it's just a little chip. It's not like a whole fucking backpack and headgear. Just the little Neuralink chip. The monkey playing Pong. You guys are wondering who's on your other side of your trade. It's that fucking monkey every time you lose. Through his brain he's trading. I want one of those. Sick of clicking. Foot Locker continues. I was gonna do it. I was gonna post another Foot Locker chart, but it's fine. It was gonna upgrade to like 63 here with a triangle here as well. Same triangle as the other charts, but it's really not needed. We already have the chart here and stuff. But I would say that there is that trend here, just like those other charts as well. I would put that into perspective with this continuation here, with just this trend. So maybe keep that in mind, that you do have a pretty obvious inbound trend here, beyond just this idea. I would upgrade it a little bit in terms of timing as well, right? BRKB looking very good. Trading on the same trajectory as it has been. It's been a nice trade again. This was a very nice trade over here. Enjoyed that trade a lot. When we were going really value heavy on the mega large cap side, and now taking this trade again, I mean, it's a nice. It again works very well with some of the very short term risky ideas we have to take those trades, like the value trade that you can keep pushing, and you have these investments and these ideas that will hold you through any time, and you can continue to make the money there. And those are important. The more you increase your capital, it's so important to start to increase the idea of some of those trades that you don't need to manage. Success is, I would rather have those trades that I don't need to make 100% on those. I can make 20% on those, and I'd rather make that 20% because I don't need to make 100 trades to make that 20%. I can make one trade, right? There is a situation there where the less trading and the be able to put more money into a position instead of a bunch of small positions is worth more because of the risk involved and the amount of trades you have to make, the amount of human error that's involved. I mean, those things are definitely things that are involved there. Less risk of having to get in and out on those larger trades for sure. And you get filled on everything a lot quicker, right? Getting software is just very good, very bullish. You can buy almost any of the growth tickers. We already know that, but very strong. Retail stores. Let's see how this BJ moves goes. Again, we're betting on retail stores and everything to get going again here. They're in a very interesting spot. WBA pulled back down. Yeah, this price action is gonna basically show itself. And put on the 15-minute. Oh, buy some underlying, sell some underlying. Yeti is definitely the squeeze city over here. Going into high. A lot of points there. Yield's coming back down. We didn't get any. Hold on. Down, turning down. Microsoft up. Okay, so it's mixed. Nice. Oh, by the way, my whole Amazon thing from last week got a refund. Never came. They just sent me my money back, and I'm like, okay, so am I gonna order it again, or what am I supposed to do here? So that was great. Thanks, Amazon. I wait a week for a delivery, it never comes, and then I just get a refund. So should I buy again? Really great stuff. Really good stuff. One of the funniest things is that I'm one of those people that after like a few days, I no longer want to buy something. So like I just buy it right in that moment because I know in a few days I'll probably be like, I don't need that. And so now I'm like, well, I'm just not. I'll just take the refund. I'm not gonna buy it again. I do that with everything. I'm like, oh, well, okay. I guess I don't need it. So whatever. Okay. What do you guys think about Coinbase? What do you think? What do you think is gonna happen with it? I need your IPO experience. You guys have more IPO experience than I do. I mean, at least trading it probably. It's gonna pop. I just know it, says Ecto. Oh, I agree. But is it gonna be before it opens or once it opens? That's the question. The problem with the IPOs and the reason why the SPACs were a little bit better for retail is that you have all the chance to bid it all the way up. It's just gonna. Do you not think it's just not gonna open right up to where this idea already is? Right. It's just gonna. The price is gonna open right at the point where it would get bid up to. So then there's no chance to buy it. Is it gonna still pop after opens? That's the question. I think there's definitely enough retail to buy it. It's a lot of money though. I think it was 117 million shares. 100 billion. I don't know. I'm not going to trade it. Should be cute though. I am curious. Vectel thinks it's going to pop. Anyone have any idea? Should we buy it? Just shares. I think it's just a distraction. Conspiracy theory. Bitcoin's going to plummet. I am curious. There here's some different ideas, right? So we already have Tesla that bought Bitcoin, right? The first the first public company to actually put Bitcoin into their fucking business, which is, I mean, it's like a Tesla thing to do, I guess, but it has nothing to do with Tesla. They just they're putting it onto their sheet basically, right? That now this is what they own as well. Be very interesting to see if after this Coinbase thing happens, if we get other companies to now start to do it, because there's some merit now that if Coinbase is public, now we at least have something that's a company that's public that actually holds Bitcoin and like has transactions with it. And there's something that there's okay, we have a real thing that's on the market and it's not blowing up. It's just I mean like falling in price. Like it's here, it has value, it makes money. Okay, there's some sort of drive here. Be interesting to see if from there, if some of these other companies, and it wouldn't be like some random company, it would be more of a holding company idea. A holding company, banks, obviously, banks can be institutions that are public, can easily put on, but then there's also those holding companies like Alphabet, right? Alphabet being a holding company, these kind of things that you could foresee some of the idea of jumping in, and then fintech. The most obvious case would be fintech, where PayPal, Square, they're going to be allowing Bitcoin transactions and things like that. There is a reason to hold some of that if you're allowing transactions to happen through that nature, just like you would hold dollars if you're a bank for reserves. If you're a bank and you are sending cash and receiving cash back and forth, you're holding it because you need to be able to make those transactions happen quickly. The same thing with Bitcoin, but the digital currency thing is a little bit easier, right? And that's where a lot of the digital currency idea comes from, is that you don't have to actually be, not that cash is being transferred physically, but there is an idea of having a reserve of physical cash in the way in which it goes through the clearing and everything else, that it's got to go through the Fed to clear overnight and all these things, so it takes longer. There is definitely some sort of portion there still, even with Bitcoin, of holding Bitcoin to make these transactions a little bit smoother through short-term volatility. What if you're making transactions and then the value comes down or the value skyrockets? If you're not holding it, then it might make those things. Just that alone, not to mention there's an obvious idea of it appreciating itself anyway. The more the supply is on a consistent basis, so if it's being spread throughout, then the demand's increasing, price is going to get pushed up. So if it's a bit of a chain reaction, then it could be happening a little bit quicker, and it's already happening quicker anyway. The whole stock to flow model that I talked about like last year, that's happening way quick. It's happening much quicker now that institutions are involved, and you'd have to imagine it's only going to get quicker. And it's not like a bubble situation or a peak situation or anything like that. That's actually not what's happening at all, because supply is not increasing. It's like if we look at the NBA Top Shot thing, today we have a big $1,000 pack drop. Hopefully I get involved this time. But think about what happened with that, the NFT thing. So the NBA Top Shot thing, right? Prices were skyrocketing, right? But what happened? No one could buy a goddamn pack. And you know what's not fun? Is not being able to buy a pack or get to be able to participate, right? So if you can't participate, then you no longer want to do it. I'm sick of waiting in line to do it. Like, if I don't get one today, I'm probably not going to wait in line again. Maybe like every now and then. So you know what they did? They increased supply. So supply was very constrained on the Top Shot thing, right? And on anything, right? And so price increases and it skyrockets because demand keeps increasing, but supply is still constrained. But what happened? No one wanted to wait in line anymore because no one could get anything, because there's hundreds of thousands of people for a few packs. So they increase supply. What happens when supply increases? Price comes down. It came down pretty violently because both of those things were happening at the same time. Demand, people didn't want to wait in line anymore, and packs increased, so price came down like this, right? Still a little bit above where it started out, of course, and some were a little bit higher because they didn't increase too much, but that's what happens. Is Bitcoin going to do that? No, it doesn't even work like that. So the supply is not going to increase and cause price to come down. We already know when the supply increases on Bitcoin and how the forks and everything, all that dumb shit happens, right? Not dumb, but we already know these things. So all that's happening is demand's increasing, supply staying the same. We know what's going to happen. It's just whether or not that demand falls off, but there's not really a factor in which demand falls off if it's being spread between institutions. So it's happening quicker and quicker. If that, hard to say what happens with the most obvious tail risk is regulation. And it's so important to still think about the idea of inflation. And I talked about this, and I think there's probably some other people that share this view, is that when you look at inflation, the way that we have it as a metric right now, inflation's not up yet, still. It's barely started to increase, right? Even with trillions of dollars of spending, trillions of dollars of buying by the Fed and the government fiscal stimulus, right? Inflation has barely budged. But what's not accounted for is the $2 trillion crypto market. If that $2 trillion was in any other spending, then we would say inflation's probably picking up, right? And so this is a way to increase spending and the Fed continue to buy because inflation is actually happening in a different risk asset that's not accounted for on inflation. And they know that. They know that. We can see it. We know that the crypto market is now $2 trillion. It's a big market. That is that's people buying, and that's inflation. That's price increasing and appreciating. It's inflation. It's literally what it is. It's wealth being created in front of us. So what the government can do is that they know that's happening and that they're spending and that that's happening. They can regulate if they need to control inflation that way as well. And so that's a tail risk. I don't think it's going to happen. And I don't think digital currency or anything like that affects any of that market at all. But there's definitely the idea of them having the ability to regulate will regulate inflation on itself and hold inflation itself and let them control it by the fact that they could do something. The fact that the Fed can intervene at any point in the market is what keeps the market consistently trending up right now, right? Because we know every time the market comes down that Uncle Sam is coming in and is going to, Daddy Powell is going to come in there and enter the market. If the economy is going down, we know that some Biden bucks will be coming in quickly. Couple checks to the bank account. You'll be good. Oh, you can't afford something? Well, let me send you another $1,200. How about that? Oh, you guys are unemployed? Well, we'll increase unemployment, okay? We know that those things will happen now. It's the same on the regulation side. We know that if they need to regulate, they could. And so there's a tail risk there, and so there's some sort of risk there. And so, again, there's these ideas in mind. I would say that Bitcoin is directly linked to inflation, and the fact that cryptos are increasing is a direct increase in inflation. And it's a part of the metric, but we don't account for it, right? Just like housing, we can see what's going on with housing, right? There's a big boom going on still. Prices are increasing tenfold. There's barely any supply. I read an article about one house, I can't remember what it was. There were 76 buyers in line, and they were all willing to pay cash. 76 buyers, and they were all willing to pay cash for the whole fucking thing. For one house. These kind of things are everywhere, right? Those are inflationary ideas, right? So we know that, and that can only propel us forward, right? But we still need to understand the tail risk involved, obviously, that, okay, there's things that could affect us, right? Beyond the aisle. So it's going to hold pricing in some sort of way, right? It will help us be more consistent. And it could be a risk, right? It could definitely be a risk that some of these things would happen. But the thing that happens is as this spreads, right? If more and more institutions hold Bitcoin, the idea of the government regulating goes down. And so that's where part of this becomes, if Coinbase and all these things start to happen, okay, well maybe, we'll let it slide, eh? Digital yuan, digital dollar. They could just come out and be like, no, the dollar's been digital the whole time. We actually don't even, the cash is just don't worry about it. We could go digital tomorrow. Literally we all use credit cards and shit. Could go digital tomorrow. The only challenge is converting the cash under people's mattresses to digital currency. You could just be like, well, once somebody accepts it, turns into digital. Doesn't matter. Supply would be the same. They could literally just maneuver the supply however they wanted. They already do it. Literally makes no difference. It's like the same with when we got off the gold standard. People can still turn gold in for dollars. That didn't change, right? Gold just been appreciating for fucking 40 years, 50 years. Since 1971, gold's outperformed the S&P. Keeps going up, right? You can still turn your gold in and get some dollars for it. That won't change. You could still you could still spend your cash from underneath your mattress from the last 10 years. Even if there's a digital currency, like these things, there's different reasons why they'd be risks, but interesting ideas to think about though, because some of this shit's gonna definitely affect some mentalities. Like the spot VIX being down here. Are there risks in the market? Absolutely. Is there going to be price movement? There's going to be more price movement than back here for sure. But that's why these two things are not the same. This is, we call it the fear index. It's literally the fear index. True. It's no longer the volatility index, it's the fear index. Absolutely. Little fear, but there's still going to be a lot of movement, right? Okay. Don't think we have anything to see here. Hey. Nice flat trading day so far. Confirming from last week that the market is very bullish and we're not taking profit. No one's taking profit. No one's doing anything. And no one will do anything unless someone moves first, and no one's going to move first because everyone's doing the same thing, which is going long. So it's not like we're waiting for something. No one's waiting for anything. So we're not low volume because people are waiting. No one's anxiously waiting. Because if you're doing that, then you would take profit because you're not sure. You're uncertain. No one's uncertain right now. Certainty can lead to problems. Can certainly lead to problems, and it causes violent reactions. We're aware of that. We're understanding that if yields did cause a violent it could cause a negative reaction, that we would react accordingly. We're not going to fuck around with it. We're going to get out of those positions if it need be. As soon as something gets going, we're not going to try to guess. But right now, we're just melting. Confirm the bullish idea, no take profit. And so, again, we leave it at that. We don't go beyond that. We understand that today is just a part of the trend that we're within. And it's a piece of information that is just continuing what we've already seen. And so we're not seeing something different. We're still looking into the future a little bit here. We're looking towards the end of the week and into next week. A lot of that does stay, that we're not going to get a historical sort of move here. We've had a lot of green days in a row here. We haven't had any take profit. You should be taking profit here. We're not going to take profit. We're not going to. And so, again, that's where you're crazy not to continue. You're crazy not to continue and ride this. We're going to continue. Where and when certain things start to move, we'll react, right? We're quick enough. We can do that. Something started to happen during lunch, it will happen. Maybe it happens, right? It's okay. If we get a take profit day today, tomorrow, we understand that there's different ways we can react. For now, we are buyers. We are buyers, and if I wasn't in a position, I'd be buying here even. That's not the historical way to look at things, but right now that's where the market is. And so that's it. Don't stay in your lane. We stay disciplined and keep that in mind. And until price changes, we don't go off of headlines or stories or anything else, right? We go off of price. And right now, price is telling us that there's a lot more to be had here, right? Price doesn't stop for anything. Care about your moving averages or any other fundamental ideas or any ideas that are out there. Price doesn't stop moving for those things. It doesn't. So for now, this is where we're at. We don't have much to see. We don't really need to see here. That's a nice part of the price action like this, is we don't have to sit here and watch it. We have been. We're keeping it in. We're keeping it in our minds, and in the ideas fresh, and we keep looking for new opportunities. We're looking for the next thing, right? We have a lot of ideas for the next trade, right? And that's an important part, but we've we've been able to bank up those ideas, and we're ready for if those start to make a move. We have plans for everything, right? We always have new plans. So if we did take profit, we know where the money's going. That's it. We don't need to go further. So not going to sit here and watch the price action too much. Don't let it, again, don't let the idea that you have to do something fool you. It's really easy to sit here, and I know because I've done it myself. It's really easy to sit here and be like, well, nothing's really happening. I should make something happen. You don't have to make shit happen. You can sit and have a good time and do whatever you're doing. Work, do whatever else. Enjoy your lunch, right? I'm going to enjoy my lunch. I'll see you guys in the afternoon. And until then, enjoy. Thoughts on ZS? ZS is still very good. I mean, let me just be honest and blunt. I don't know what that question means. It's moving on the trend. Start on your bears. Yeah, the candle, short-term bearish, but the overall idea, it's trending on the target line. What I would say is do not overthink it. Again, we're trading on the idea. We took it on support. One thing to remember is that when I'm not biased on my short-term list. If the candle's there, I will post it. It doesn't overtake the overall bias though, right? If the overall pattern is moving towards the upside, a short-term candle will not affect that. Most circumstances, right? We're just aware of it. It's bullish. Do you want to know what I have? What I think price can do? I think it's going to go to one of my 2 targets. Yeah. If it's like this and I just posted a chart on it, know that I have not changed my mind. And if it's trading on the exact same trend as I have posted, like it is here, then no, my thoughts are exactly with the price. And that it's bullish, right? And it's trending to the upside. It looks very good. And again, software companies, like I've been saying since last week, are very bullish, and we're trading in between these levels. So very bullish. I think this is a very good trade, and this was a very straightforward trade, and we talked about it back here. We talked about it on this day when it came down the trend line and then took it on support here. This was a very, very nice trade with all the software companies, for sure. But yeah, I wouldn't overthink them. If it's trending to the upside, it's bullish. That's it. Right, that's it. And especially if I post a chart on it, then took the time to look at it, it's definitely bullish. And ZS has been one of the it is more straightforward to see the breakouts here. And it's very much like our trades of support to trend line. That's it, right? So far, it's one way. Looks very good. But yeah. I'll see you guys this afternoon. Enjoy your lunch. Again, very, very nice, slow start to the week. I wouldn't have it any other way. Unless it was bid, and then I'd be like, okay, well, I guess I'll exit my positions now. So I'll see you this afternoon.